It isn't always about the big wins. It's about the small, consistent wins built up over time. And in this video, I'm going to share with you how we had one of those smaller but consistent wins in NVDA and how it helped contribute to us tripling the S&P 500 in 2017. What's up, everybody? My name is Michael Lamott. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're doing that is by sharing with you some of my experience and my journey of just a regular guy that's putting all this stuff to work and has found a way to make it work. And therefore, hopefully, you will be inspired that, yeah, if this guy could do it, so can I. So in this video, I'm sharing with you the steps that we took to end up with about a 12% gain in NVIDIA. Now that doesn't sound like a lot, but it's not about the particular gain. It's more about understanding the process and how that worked and how sometimes that process produces small wins, small but consistent wins. Sometimes it produces a couple of losses. Sometimes it produces some really big winners. But overall, it's doing the consistent process that leads to something that's able to triple the S&P 500. So let's dive into this NVIDIA trade and take a look and see what this process looks like. Okay, so there's quite a bit that's going on the charts that I'm showing to you right now. I want to walk you through it, and then we'll walk through the actual trade, especially for the benefit of any of you that are new to watching this video and to what we're doing here on this channel. So what we're looking at here are two charts. We're looking at a daily chart, that's this chart up here on the top, and well, we'll look at each of these individually as well, but to just show you the overall move and how we go and filter down into the actual trade, I'm showing both of them. So we have the daily chart up top, and we have the weekly chart down below. And the charting service that I'm using is a charting service called TradingView, which I actually like quite a bit. They have a free version. I'm using the paid version. The paid version is only about $10 a month, and it lets you do a lot of cool annotation things and some pretty cool automation things as well. And there's another video, I'll link it somewhere up here if you are interested in finding out how to do some of that automation stuff. But let's take a look at this. So we have these two charts here, and each chart, so each of these bars up here represents a 1 day, each bar down here represents 1 week, and this indicator, you see this indicator on both charts, this little squiggly line here and that down there, that is the stock's performance versus the S&P 500. So it's showing you the relative strength versus the S&P 500. And the reason why that's important at all is because we want to buy stocks that are outperforming the market. And this is a very good indicator of seeing what stocks are outperforming the market. So let's take a closer look at some of these. Let's start with the weekly chart just to get a better idea of what we did and of the bigger move. So we saw that NVIDIA was a leader, and well, we traded this at other points as well. I'm only showing you this particular trade so that way we could just focus a little bit better. But you could see how it broke out, ran for quite a bit, started to consolidate over here, ran up again, was getting support along this 10-week line, and because it was still outperforming, it's on the radar as a leader, and because it started to consolidate along this 10-week line, that's what clued us in that, okay, it's getting support along the 10-week line, and it's a leader. And you could see it start to tighten up right around here. So it started to poke its nose above short-term resistance, and we'll see that much clearer on the daily chart. And then we set our stop right below this weekly low over here, which also correlates to the 10-week line, but it's also a prior week's low, so it's like giving you two different ways to get stopped out, a shorter term support level as well as an intermediate term support level being the 10-week line. And then you could see how it started to move up a bit, ran up, and then it loses support at the 10-week line, and it loses support at that prior week's low. And there's another one that I'll show you that's a bit clearer on the daily chart as well. It's also going to lose support at an upward trend line. And it does all that, and so we end up getting stopped out right over here. And NVDA ended up continuing higher from there. And depending on what time frame you're trading, or if you're somebody that just looks at this as a singular move, it's like, okay, well, what the heck happened? We got shaken out, seems premature, it ended up moving, it went up without us, and that's something that ends up frustrating a lot of you out there. And well, I actually want to do another video specific on the topic of like getting shaken out, but I'll talk about it a little bit here, because this is something that used to frustrate me to no end when I would see something like this. I would get in at a spot like this, and entries are so much easier than exits. And one of the reasons why is because you're able to have such a clear and concise plan of like, okay, I'm going to get in here, I'm going to get out there, and then let's see what happens. And so you end up getting, you exit, and then you could have the seller's remorse if you don't see it start to fall over, because it's like, well, should I have held on or should I have let it go? And then you see a move like this where it continues up without you, and you're getting out pretty close to where the low point is, and it's like, man, I should have held on. Well, should you have held on? What are your rules? What are your time frames? What are the signals that you're following? The only thing that you don't know that this is going to happen. All you know when you sold was this over here, that it's breaking below support, it's closing below that 10-week line, moved pretty significantly below it, and that's a level that was held since May of 2017, and you end up selling in December of 2017. So you have a solid 7 months of holding this line in the sand, and it crossed it. So should you have sold there? Really depends on the signals that you're taking in the time frame. We ended up selling there. But let's take a closer look at the daily chart and we'll see what exactly was going on. So, up here to the daily chart. And you can see pretty clearly over here how we got in and where we were setting up our stops, right? So just move this around a little bit. We got in on August 31st at $167.38. We got in as it poked its nose right above this. It has this resistance level here, that short-term resistance, as it was starting to tighten up right along that 50-day moving average. And it also had that descending trend line as well. So it broke above both of those. Knew it was a leader already, so that's what got us interested. And it also had this pretty clear line in the sand down here. The initial stop was 157.27. That gave us a risk of only about 6%. And so if it were to break out and then roll over, it would need to take out all the shorter term moving averages plus the 50-day moving average, where it's typically been getting support on or around that level. And it also established a support level right over here too. So multiple reasons to exit this trade if it were to fall and roll over. That's just something that's always good to have no matter what you're trading. So it started to move up, and it starts to... That's Daddy. You want to say hi?
Hi.
How you doing?
Good.
This is gonna get all the hits.
Yeah, now people have a reason to tune in.
Yeah.
That's Lily. I see you later, Lily.
Lily, what do you think the stock's gonna go up, up, up? Up or down?
Up.
Yeah.
Okay, there you have it. It's going up. Whatever it is, it's going up. One of the benefits of working from home is that sometimes you have guests come in and give some special commentary on which way the market's going ahead. So you have it there. Market's going up. Anyway, well, let's take a look at NVIDIA. All right, so let's take a look at NVIDIA again. So we have NVIDIA, and yeah, we had these multiple layers of potential support, which is what we want to see in every single trade that we take. So we end up buying it, and it starts to break out. And you see the sharp pullback here, and at that point, it pulled back pretty much to where we bought it. Well, let's see. The low of this day was 170.16, so just above our break-even point. So it wouldn't have stopped us out there had we moved our stop up to break-even. And plus you have the 50-day moving average. Great. Starts to bounce off that, runs up a little bit higher. Is getting support along the 21-day exponential moving average, and then you get this over here, this choppiness. And now let's move this out of the way. And so you could see how it had this little short-term uptrend, was getting support at the 21-day exponential moving average, breaks that. We're not too concerned about the 21-day exponential moving average for the purpose of this trade. And the reason why we weren't is because this is meant to be more of an intermediate to longer term trade. So you've got to expect that those shorter term moving averages will break at some point. And so part of what we want to be real aware of are what's a signal for us in this particular trade for this particular portfolio or whatever it is that we're managing. What's a signal, and then everything else is not a signal. There could be a lot of noise when we're trying to juggle too many things at once, even within our own systems. For me personally, I run 3 different styles, a short-term, intermediate term, and longer term. And if I'm trying to do everything all the same time, that's when I used to have such a big problem, and I would see booms and busts all the time. And the reason why is because I was trying to do too much at the same time. If you separate it out, yeah, sometimes you get something like this, where like, oh, had I exited over here, I would have maximized my trade, but that's just one trade. The goal is to maximize your performance for the portfolio and over the year and over multiple years. And the way to do that is by having a very consistent process. And yeah, that means that sometimes what could be a trade that was 4.5 times your risk is now 2.5 times your risk, but it's following the same procedure over and over again that lets you take advantage of it. And so for this model portfolio, intermediate to longer term in nature, and it breaks below the 50-day moving average over here, check that one strike. And again, check out that video where I talk about the 3 strikes to selling. That's what we're doing for pretty much every case in this model portfolio. And so you get that it's breaking below this level of support, right? So right over there, that former ceiling became support, tested multiple times, tested it over there, failed over there. It broke below the 50-day moving average, strike 2, and you also had it breaking below an upward trend line over that way. You could make the argument that there's another shorter term upward trend line going this way. There's so many different ways to draw trend lines. It really is an art, and it really is more about what time frame you're interested in looking at. So for us, we were looking at this over here as a potential upward trend. The 50-day moving average breaking below support, okay, out on December 4th at 187.62, gave us a 12% gain, and it's the process. It's the process of doing this over and over and over again that it's giving us that bit of an edge where, yeah, you end up having some givebacks like this one end up getting shaken out of it. Did we get back into this trade? No, but it's one that we've highlighted for our elite stock setups. We have the advanced stock report service, we have the model portfolio, and then we have our separate watch list. And I want to do a video all about watch lists because that's something that will help you not miss certain ideas of certain trades, but others will also come in. And if there are better opportunities or better perceived opportunities, then you may not get back into one like this that ends up going up. Let's see, let's just measure this, right? So let me get the ruler over here. And let's say we bought this, right? Like buying as it was breaking out over here, then that's a 22% run. Who knows if we would have gotten out, wouldn't have gotten out at the top, probably would have gotten out somewhere down here, right? So another 5% run. And you could make whatever kind of arguments, but it's more about like keeping a watch list, so like being ready for the opportunities and then taking a look at your watch list and then trying to figure out what's going to be the best opportunity on that watch list. And there's a lot of different ways to figure that out, and it's a little bit outside the scope of this particular video. But to go back to our original entry point, not to get too far off the rails and to tie it all back in together, this over here is a solid trade. This over here, arguably is, but I like this over here because you have more of a clear support level down here with the 50-day moving average. And over here, if you're buying that breakout, then you're trying to test this level over here, and plus you have some more potential resistance over there. And yeah, like this just looks like a much cleaner entry to me overall. As you're getting this descending trend line, the clearer level of support, the things tend to be rising higher. Just a lot more reasons to go into this entry back here versus trying to play this. Now, this is something that we ended up highlighting over here as a potential entry point for the elite stock setups. We didn't take this entry for the model portfolio because there were others that came on and that we were interested in. We actually are interested in Alibaba and Facebook as of the time of this recording, which is, well, what's today? Today is March 13th. This video will probably be published a little bit later, but you can kind of see like why something might be of interest in how you can keep something on the radar, and then if something else comes on that's more attractive, you go for the better opportunity. I apologize for going a little off the rails there at the end, but I think that there were a few key points that might be of value to you. Let me know what you think. Leave it down in the comment section below. If you have any questions at all, leave that down below too, and I will personally answer you. If you like this video, click that thumbs up button. That always helps us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care, and have a great day.